What's going on, everybody? Chris Franks with Texas West Capital coming at y'all live here just a few minutes after 11 a.m. Central Standard Time on Friday. What is today? The 20th of December, guys. We are almost there. The 20th of Christmas, the 20th of December. You got 5 sleeps till the fat man comes and drops you some presents, right? Or if you're me, or Fibbo here, we'll have him on in a minute. I guess you are the fat man coming in on the 25th. The stages of being a man, right? With Christmas. And at one point, toward the end there, you become Santa. So, yeah, anyway, hopefully y'all are doing really well. As you can tell, we're having a good time. We're excited. If y'all caught Wednesday's Beards and Bitcoin, crazy thing with the mic. I don't know what happened. It went out, and Andrew took full charge after that. So if you haven't seen, you might want to check it out, even if you just kind of skim to the end. But a lot of good stuff in there. I just can't trust these guys, But anyway, it is what it is. Oh, man, we got a Grinch here already. Look at this. Cecilia says she's the Grinch, and she's here. Look at that. What's up with that nonsense? We can't be Grinchy. Anyway. So do me a favor here, guys, before we get going here real quick, hit the thumbs up, hit the like, hit the subscribe, leave a quick comment. Unless you're going to be like the last idiot, I'm going to say that, on Beards and Bitcoin on Wednesday, who, just kind of went into a whole bunch of name calling and said we were noobs. I don't know. Between myself and Andrew, I believe we've got kind of like myself and Fibbo here, we've got in excess of 50 years of financial markets. So I don't know how that makes us noobs. Also been in Bitcoin since, 7 years now. Anyway, if you leave something stupid like that, go ahead and leave something stupid like that. I'll be glad to put you on blast. But I don't understand why people kind of step out there and just prove their lunacy, I guess, right? Anyway, as I continue talking, I'm going to go and bring this guy up. Look at him wearing the Christmas hat for y'all.
That's right, Fibbo Santa in the house.
See, and y'all thought it was just a fake picture there on the thumbnail for YouTube here, right? And everything, but it wasn't. He's got the real hat.
Yep.
He's got real hair. I don't have much of that. I got more hair on my face than I do on the top of my head. He's got hair though. Lucky him. It is what it is. So what's going on, Fibbo? I just caught that. Fibbo Santa. What's up, man?
Hey, I just went by the title of it was Santa Claus Rally Incoming or Crash. I'm going with Santa Claus Rally, man. I'm going to put the hat on.
Yeah, and so that is today. The title of today's show, Santa Claus Rally or Crash and Burn. And of course, this was all thought up the other day prior to today, to what a morning it's been, right? So we got indexes, we got the NASDAQ, we got SPY, we've got the Dow, all up something like just about 3% already this morning. We've got Bitcoin up over $4,000 this morning after the overnight dip. So, I'm kind of like with Fibbo here. I'm thinking we're probably going to get a Santa Claus rally here. And, we'll be talking about these charts here. Let me see here. Oh, Joseph, what's going on, man? He says, has anyone been more accurate than Fibbo Santa? Underrated. Oh, man, guys. I'll tell you what.
Go ahead.
If you've had fun this year with TWC, with me, with Fibbo, with everything's going on, next year, we're just going to keep blowing this thing up, guys. We got so much going on. But let me stop for real quick here before we jump into the charts, okay, guys? Let me explain a little something to y'all, all right? A lot of people join. They say they want to become traders. They say, oh, I want to do this, and they sound really convincing, maybe even to themselves. And a lot of people do this, not just with trading, but in other things in life. But they lie to themselves. They lie to other people. It sounds good. We lie to ourselves. We say, okay, we're putting in the dedication, the effort, the consistency, the focus, the discipline that's required to be successful and to learn the skill that we want to learn and apply it. But in reality, we don't. Because these days, a lot of people don't really have that upbringing, that push, that you kind of just a little bit of effort and you're like, oh yeah, I'm trying so hard. right? And it's like, no, you're not. And you go, oh, well, it just doesn't work. Well, no, it does, but you're not being honest with yourself. And I point this out there because, people come in and they'll join, either TWC or something else, or even just straight up Fibbo's threshold theory there. And they'll get in and they will just half-ass it. And you will not get anywhere half-assing your life around, guys. It really takes focus, discipline, consistency, commitment, effort, patience. It takes all that. There is nothing different with learning trading than there is any other skill in your life. And I think Fibbo would agree with me on this. This is where he agrees. See?
Yes, I agree.
But seriously, guys,
I'm with you, man. I'm with you. It makes sense.
But seriously, neither Fibbo nor myself, neither one of us learned to trade in a month, in a year, right? It's taken years to get to the point where we're at. It takes for most people, it takes a couple of years to become consistent, because there's a lot of things you have to change with the way you think when you come in. You may think, oh, I'm different than everybody else, but you're not. When you come in as a retail trader, you're just like everybody else. You make the same mistakes. You have the same missed thoughts, right? The wrong thinkings. But the good thing about that is listen, you're not special, which means you can learn to trade, which means it's okay. Whatever you've done, however you've screwed up in the past, it's fine. Forgive yourself now and make a decision to be purposeful in what you're doing. But a lot of you, go ahead.
No, I was going to say one of the benefits I feel like we had when we first started trading was that we didn't have social media at all. And I feel like that was a benefit because it helps you get focused in on what you're doing in the charts. And another thing we didn't have was TradingView with 10 billion different indicators, which could also be, kind of hectic too. Yeah. So I think for me being, without social media and, more traditional indicators, and that's probably why my system ended up being more traditional with the RSI and an ADX, because that's what I learned over time and became an expert on less is more, that kind of thing. Yeah. So not that you can't do it with social media, you just got to really be careful because there's a lot of what could I say, shit out there.
Just put it nicely, why don't you?
No, it's just there's a lot of good information out there too. It's really hard to decipher what's good, what's bad, what's right, what's wrong.
Especially if you're new and you don't know yet, right?
Yeah, exactly. And it would just give you analysis by paralysis. You just got all of this stuff going on. I have no idea where to even start, that kind of thing. So I think there's a little bit of benefit with that. But I could be wrong because anybody that's, younger and starting out with computers in their life probably have better ways of handling that and coming from, not having it to having it is a different mindset, I guess.
Yeah, no, exactly. But at the end of the day, the same thing today as it's always been in the past. I'm gonna let you guys know, simpler is better, right?
Yes,
you shouldn't have 5,000 indicators cluttering up your entire screen. But the thing about that is, though, it takes time and seat, right? You've got to spend time in front of charts where you can start getting to the point where you recognize swing highs and swing lows. That is like the basics of trading, but it's one of the most powerful things. And so I always tell, our students, look left on the chart. Look left. Always look left. No matter what kind of indicators, whatever you've got going, look left, right? Because that's going to tell you where your general areas of support and resistance are, where you could be targeting. And it just gets you started in a right way, in a correct way. But I'm going to be honest with you guys. Again, it's not that you can't learn to trade like in 6 months or a year. You can learn it. But learning how to do it and actually doing it successfully, consistently is a whole nother thing. And that takes practice.
Yep.
Remember at the beginning, I said discipline, focus, consistency, effort, commitment, patience. It's the same thing. If you wanted to be a professional footballer, it is the exact same thing. You would go hire a coach and you'd be like, oh, but the amateur team or whatever I'm playing on, I want to go play pro. The amateur team I'm playing, we get a coach, we get all that. Yeah, But what do the professionals do? They hire other coaches to come in and specifically, to deal with certain issues that they're having, whether it be mental or psychological, whether it be a specific skill set, these kind of things, right? But for some reason, people think, oh, I'm going to come in and trade. I could just do it on my own. Well, there's a reason 95% of retail traders are out in the first 3 months and they don't come back, right?
Yep. And they also become experts in the fundamentals. Like if not fundamentals and fundamental data, I'm talking about just like if you're a football player, you want to know the fundamentals. You know what I mean? How to tackle, how to do, there's certain things. And the same goes in trading too. It's like there's certain things that you want to become an expert in before you start to branch out in more expertise in different avenues. So like you got the fundamentals of football down, you know how to tackle, you know how to run, you know how to catch, those kind of things. But then I want to become a left tackle, and then you become an expert on what the left tackle should do.
Yeah.
And how you position your body and how you do this. It's the same thing with trading is once you get those fundamentals down, then you kind of become an expert in a certain area. And that's what I did and come down to a point where I built a model around it to, take what I know and put it into a model. And then that way I can take emotion out of it. And then the same thing with left tackle in football, right? They're not gonna think about it. They're not gonna be emotion. The ball snaps, they're gonna fucking go, man. They're just gonna go.
Exactly.
So,
And that's the thing. And so, I kind of bring up all this to really kind of just point out here, guys, listen, a lot of what we do, and I did this at first as well, and I'm sure even Philo did when he first started, was we get out there and we kind of half-ass try a specific strategy or something. And if it doesn't work immediately or it barely works, we're like, oh, well, that doesn't work. And we go on to the next one, right? And you go on and you keep looking at new strategies, new indicators, new different, instead of spending time getting good at the one you're using. But even before you do that, you have to understand that your emotions are going to be the most difficult part of what you deal with as a trader. Everybody's like, oh, Wall Street's stealing my money. Crypto whales are stealing my money. No, you're losing your money. It is you. It is 100% you. And until you accept that, like really accept it, and you go, okay, yeah, it is. Because once you do, then it forces you to become really strong with your risk management. Okay. And even though Fibbo and I have different ways of trading, we both focus on our risk management. And it's a different type of risk management. He has a specific type of risk management that he uses for his system. But that's built into his system because it works. I have a more general type of risk management that works across most things because it works. But the important thing is we both focus on risk management because we both know, guess what? It only takes one trade to lose everything that you could have had 30 winning trades in a row. One bad trade, you wipe it all out, right?
Yep. And a lot of people ask me a lot about risk management, and it really kind of boils down to the same kind of thing of everyone has their own risk tolerance. And depending on where you fall in that risk tolerance, are you kind of a conservative person? Are you an aggressive? It just depends. And everybody's books and portfolios are different looking. And there's not a one-stop shop for risk management. So based on how your risk tolerance is, you might, have a program that looks a little bit more like what Chris does on his, what do you call it? Star or something? What do you call it? Face? It's a 4-letter. Maybe I'm reading something else.
I'm trying to figure out what you're talking about, man.
No, your risk management plan. Isn't there
risk.
like,
yeah.
What is it?
Risk. The risk.
Risk. Okay. I knew it was four letters. I didn't know.
Just that easy.
You had an acronym of some sort. I couldn't remember. I don't know if that's an acronym or what.
Yeah.
But what it boils down to is risk tolerance. Build your risk management plan based on your risk tolerance. So not everybody's risk management plan is going to look the same. And I say that because a lot of people ask me what I do, and I'll explain a little bit on what I do with my program, but that risk management plan might not fit you as an individual. Something along what you do might fit them better, or something or something that kind of fuses the two together or whatever. So it really kind of comes down to how you guys put together your plan and your strategies all together. So I know that's not an answer that people like to hear. They just want this cookie cutter box that says this is exactly what you do. And even if I gave you a cookie cutter box, it still might not work because it doesn't fit your personality and your risk tolerance. 100%. I know that's a hard thing to swallow, but it's just the way it is.
Well, we're I always say it. We're not here to tell people what they want to hear. We're here to tell them what they need to hear, right? Because if you're, we take it seriously, guys. If you're here listening to us, we think you want to be serious about trading, and in that case, we're going to tell you what's required and what you have to do. Now, whether you want to agree with that, whether you want to argue with it, that's on you. But it doesn't change these things we're telling you. Again, between the both of us, we've got over 50 years in financial markets, guys. 50 years. We had to have figured something out, because otherwise you're not going to sit there and lose money for, a combined total of 50 years in the markets, right? You're just going to be like, screw this, man. I'm done. I'm just going to go work for the man, take my holidays, take my vacation, do my thing, right? Real quick here, we got some questions real quick before we jump into the charts. Sarang is asking, is it possible TWC members to book one-on-one with you or Fibbo an extra price? That is something I'm looking at doing next year. I don't know about Fibbo. I haven't talked with Fibbo about this yet. This might be something him and I need to talk about, see if he's got the bandwidth to be able to do that. Unless he knows already right now if that's something he wants to do start next year sometime. Or do you want to talk about it?
I have done it in the past when I do have some extra time. I have done that. It really just depends on the bandwidth I do have, but it is a possibility. It's just it really just depends on how much time I have. But I have helped a lot of people in the past on that.
Yeah. So there you go. It will be an extra price, obviously, though, because both of us are kind of swamped with things that we have to do, unfortunately. But
so in other words, it won't be cheap.
Yeah, exactly. But it is one-on-one. That's what you guys got to figure out if you want that, right? Yep. Real quick here, let me see here. I know I had some other ones here. Question: how do you approach losing and acceptance then moving forward? For me, again, this is something I had to. This was the big turning point in my trading career way back in the day. After the first few years, I just kept losing money. Was like I sat down with myself and I said, "Listen, self, stop being an idiot." No, really, I said, "Listen, if I'm serious about doing this for the rest of my life and want to be this point where I'm at now," I said I had to be serious about it, and I wasn't being serious, right? So that thing I talked about at the beginning, where we say, "Oh yeah, we're really putting in the effort and the time and really everything we need to," but we don't. That was me at the beginning. And I had to have a come to Jesus meeting with myself and say, listen, this isn't what I'm doing is not working. And I can't keep losing money. So either I need to get it figured out or not. And that was my decision that I had to make. And so part of that was, okay, listen, I grew up as a perfectionist. My father was in the Navy. So, crack that whip as we were being raised. And so if you come in with a perfectionist attitude, it's going to be really tough on trading, because trading is anything but perfect. It's about being consistently profitable, but there's going to be a lot of imperfection in that. And so you have to go, okay, well, I can't be perfect. There is no perfect. So I have to focus on what? Risk management. And once you kind of accept that, I mean, really accept it, it becomes a lot easier. But there's I've never found a simple way just to turn it and get it to acceptance. It really is, you have to, like anything else in life, you have to get to that point and you have to go, okay, here I am. And then you get the acceptance and then you do it. I don't know if Fibbo's got something else himself.
Yeah, no, I mean, this is always a pretty interesting subject. I mean, one is, handling losses in trading is going to be a vital skill for the long-term survival, right?
Yeah.
So the first thing for me is, and I think you mentioned this, is first I have to accept that losses are going to be part of trading, right? Hold on a second, I'm getting a little messed. All right. You can hear me, right?
Yeah.
Okay. Yeah. I mean, first of all, accept the losses. It's going to happen. So they're inevitable, that kind of thing. And then I know this sounds like a broken record, but you want to stick to a risk management plan. Have your stop losses, part of your risk plan, risk only small percentages. Don't go over, over exposing, that kind of stuff. What's off the top of my head here? Analyze and lose from your losses too. Like, I mean, some people might want to keep a journal. I used to do that a long time ago.
Yeah.
I don't anymore, but keeping a trading journal not just to record your trades, but if you exited a loss or something went wrong on a trade, sometimes you want to identify any kind of patterns or mistakes that you made, and write down any emotional decisions that you made that you ignored your strategy. Because that's what I did when I first was starting to put models together and stuff, like, because there's a lot of times I'd be like, I'm just going to get out. And then I got out and then my plan worked really well and I should have stayed in. And so if you write down why you did an emotional decision, if it was because you listened to some podunk dork that's sitting out on social media and said, oh, it's going to this, blah, blah, blah. And it's really not anybody that's really good at what they're doing. That could be one, too much social media exposure, that kind of thing. I don't know. But you just really kind of want to avoid any of those emotional decision making. But other than that, if you have a strategy, reevaluate it. Whenever you take a win or a loss, what worked, what didn't. I mean, I know it takes time, but like you said, it's a job. If you want to do it for a living, you actually have to take the time to, look through what you're doing and does it make sense? What needs tweaked? What doesn't? That kind of thing. And on top of all of that, I'm just going off the top of my head here, because I talk about risk management all the time at work. Another thing is to set realistic expectations. Don't go in thinking, oh, I'm just going to trade, and then next thing you know, I'm going to make 30% a week. That's not going to happen. You got to kind of set some realistic goals. Kind of that big picture. No strategy is guaranteed to profit. Put it that way. So you want to have realistic expectations. So that's pretty much, off the top of my head of what I think of that, of talking about that.
Yeah, I think that's great.
Pretty similar to what you're saying.
Yeah, again, guys, don't get out here listening to Yahoos online. Oh, you'll be an expert trader. You just got to do this one thing right here, and you're going to be an expert trader in days, and you'll be great. No, you won't. We can
turn $10 into 1,000 in a week.
No,
you can't.
If you happen to do that, it was luck, right?
Yeah.
Listen, guys, you're going to get a lot of people online. They'll be like, oh, all you got to do is look at these new meme coins that are coming out, and you got to look at this screener over here and look at the market cap over here, and then you buy it there, and then you'll be rich. No, guys, most of those damn things end up getting you rugged. Most of them end up getting rugged. And by the way, that strategy is not trading. That's gambling.
Yep.
Oh, but I got parameters. I have to do this and this. I don't care. That's gambling. It's not based on anything other than I hope to find the right combination of stuff at the low point and it rockets up in a week for me. So,
and most of the time, if you are lucky, you're not going to stay alive very long if you're going to continue to do that same thing.
Exactly.
Because you might hit 2 or 3 in a row, but I doubt it. I mean, I haven't seen very many people. I saw one guy when I was at the Mercantile Exchange. It was a buddy of mine. All he did was trade. He traded hog futures. That's all he did. Like, he was an expert in hogs, right? But he was a gambler. I mean, he really did it, and he hit huge. I mean, made like so much money off of a trade, but he kept that same mentality, and he was broke in a year.
Yeah.
And that's just because he just didn't change his ways. He just kind of kept trying that scratch off ticket, and it didn't work.
Yeah. Exactly.
You might hit a couple, but you won't hit it long term. How many people have done that with scratch off tickets?
Right.
Yeah, exactly. I made $10. I'm going to go buy $10 more. Oh, I made $10. And you keep going, and eventually you're broke, right?
Yeah. And not only do you buy $10 more with what you want, you put in an extra $10 because, it's right around the corner here. I'll get it, right?
Yeah.
So, so I think
it's that kind of mentality. I mean,
yeah, absolutely great. And I think, again, guys, the same thing I say. If you are not consistently profitable right now, you should. There is no excuse. I'm going to be a little bit more stringent about this. You should be using a journal. Record your trade. Outline your trade before you take it in that journal. What are your emotions? What emotions are you feeling at the time? Are you feeling a little nervous? Are you feeling upset? And it doesn't even have to be related to the trade. It's how do you feel in the day? Some good news or bad news might have happened, and you're feeling up or down at the time you're sitting there. Record all this, because what you're going to find is the magic word that Fibbo said there. You're going to find a pattern. Usually your losses follow a pattern that you don't even recognize because you're keeping it all up here and you're not writing it down. But when you write it down and you go back and look at it at the end of the day, and then go back and look at the week after the end of the week, you're going to find the patterns, and you're going to notice you're doing consistently the same thing over and over again that's leading you to losses. But you won't recognize it until you're writing it down. So use a damn journal, guys. And even if you are successful, especially if you get on a bit of a losing streak, because it happens from time to time, bring out the journal, work with it again. You're going to find out again that you're making the same silly mistake you don't understand that you're making when you're doing it. One other question here, and then we'll jump into the charts. Jojo Crawdaddy says, does the 10,000 hours of experience apply to trading as it does to other professions? I'm gonna let Fibbo answer this one.
I would lean toward yes.
Yeah.
I don't know if the 10,000 hours is exactly the right, formula, but it's going to take experience, because that's one of the things that's really tough for me, is to try to teach how to, fit my zones, because I can give you the steps. And then you can go and look at a chart, and the next thing you know, you're going to look back in history and you're like, well, this doesn't fit the mold. Now what do I do? So then that's where the experience comes in, to know, like I just recorded with Crown, and I just said, one of the things I said was, like trend lines, for instance. Trend lines are the easiest things to draw, but they're the toughest things to master.
Yeah.
So you can go back and draw trend lines all over the place. Well, what trend lines matter? Which ones don't? And I think over time, experience shows what trend lines work, because you know how to validate which ones matter, which ones don't, based on your experience, your reading of indicators, the reading of patterns, how traditional it comes back to fundamentals, right? Fundamentals of football, fundamentals of trading. You're not going to become an expert wide receiver in the NFL without having 10,000 hours of practice, and you got to keep practicing. And Chris and I both attack markets and learning every day. Even though we've been doing this forever, I still learn every day. I learn from the people in my group. The group probably learns from me. And I think that's, there's a lot of things that are popping up like, wow, I never really thought of it, looking at it that way, because people are looking at it different eyes. So I'm still learning, even though I probably have 20,000 hours, and I'm still learning. So yeah, I kind of agree with that. So how about you, Chris? Same?
No, exactly, guys. The main idea of the 10,000 hours, or 10,000, somebody here said, Kimasabi said 10,000 iterations instead of hours. Another good way of looking at it.
Yeah, very good.
And really what we're just saying with that is you have to have time and seat. It's not going to happen overnight, which is why risk management is so important. It's why I'm like beating a dead cat with it, right? I always talk about it. Every time I'm anywhere talking with anybody, I always mention risk management, because if you don't have that, you're never going to make it to those 10,000 hours or those 10,000 iterations or whatnot. You're just not going to make it there. You won't have the money left. So, I guess I'll say this, and then we'll jump in the charts. At the end of the day, guys, listen, most people come into trading focused on their profit. They're focused on how much money can I make. And most of the people that enter trading end up back out broke. Okay. There's a lesson to be learned there. Stop focusing on the profit on a single trade. Instead, focus on your system. Make sure proper risk management is a part of it. And just like any other business, the better you make your system, the better your revenue, the better your sales, the better your products, right? It's the same thing in trading, guys. So figure out your risk management, get it down, and use it consistently every single time. Don't just skip it one time. because that could be the time that you get the bad trade. And just like that, wipes you out. All right. So anyway, so I just want to say that, but let's do this here real quick. Let's go ahead and pull a Fibos chart here. And this is Bitcoin, as I said, 4,000 somewhat dollar rally off this morning.
Yep.
What are you thinking, man?
All right, let's get rocking and rolling here. Interesting chart. What we're looking at here is I'm gonna have to explain my system just a little bit to kind of get what's going on this chart. One thing that is key is this previous shallow fib level. And the reason I say that, let me move this out of the way here real quick. And then this is, you start way back here at this bull zone and work your way up. And we took many trades all the way up this way, that kind of thing. Because on the way up like this, I'm just moving things around here. But this shallow fib is key. So as this came down and went into the bear zone here, it never really got down below this level to where that's kind of my stop. Even though the way I approach it, and this has a little bit of risk management in it, is once it went bearish here, anything that I have over and above 10%, and when I say 10%, just say I have $10,000 in this Bitcoin bucket for the 4-hour chart. If I buy 10%, I'm buying $1,000 worth of that asset at that point in time. So if I have 20 or 30%, so I do everything in 10% tranches, if it goes into the bear zone, I'm going to reduce my exposure down to 10%. Unless I still just only have 10%, then I'll just leave that 10% on. So because I'll reduce exposure because I have to kind of honor that bear zone and just say, hey, it did turn bearish, so you never know what this thing could do. If we're getting into a bearish zone, it could really start to get ugly. So the first thing I'll do is I'll reduce all of my exposure down to 10% because I just in case this thing does kind of fall out of bed. But in this case, it came back down to this point and did not fill while in the bear zone. So so I kept my longs and that kind of thing. So when you get up to this point, get up to this high here, and same kind of thing. It goes into a bull zone at this point, works its way down, works its way back up again. And now we're up to this point here where we hit just over 108K. So same kind of thing. Well, actually, there's this one too. If you want to, you get to this point right here, and then it goes into another bear zone right here. So again, if you were over and above 10%, you're going to reduce. And then it comes down to that point. We did not add more, but we didn't go back underneath this previous shallow fib here. And then I just keep moving the fibs up to this point. And now this is back where we're at again today. Now, what happened now, let me pull this one back to where it is there. What happened this time is we went into the bear zone. I reduced things down to 10%. But then this actually dropped to the previous shallow fib, which was at 93.4. So basically 93 and a half. And it got to that previous, and this target actually hit. So on the downside here, this is a buy for me while in the bear zone. So because that's the line in the sand. So according to my risk management plan, if we get 3 consecutive settles underneath that previous shallow fib, then it's time to get out of those long positions. But since it came down to that point, and so any 10% long that I still had on here, which I did because I had some bought up here, it came down to this point. Now I'm just going to take the average of those 2 trades, be 20% long, and go into that with a little bit stronger of a foundation. So when it goes into that next bull zone, I can add another 10%, and then go, because it's all trend following, right? I want to be following that trend. So as long as it comes down and kind of resets and buys that area and starts heading higher, then I'll have more exposure going into that next trade and then make more profit off of that trend. But right now, I mean, it came down and dipped and got a little bit below it and got filled there at the target. So now I'm long 20%, hopefully going north. And then if we get the 3 settles under there, then I'm going to be out of that 20%. And then I marked down here target after 3 settles. So if we actually get 3 consecutive settles underneath here, I will be out, and then I will reestablish a long down here at about 84.2 if it gets down to that point, because that's the 61.8% level off of this long-term bull run that we've been having. So yeah, it could come down to that 61.8% level, and I'll be ready to capture some longs while in the bear zone. But right now we kind of get down to the top, to the bottom of this bear zone and kind of popped up a little bit. So are we out of the weeds yet? No, but not by any means. It could still drop out of bed, but that's why you want to have that risk management in play. And so I bought. Everything's still looking good as an overall movement. One of the things that I like on this is if you took this just this zone right in here and it works its way down to that 200%. I just wanted to kind of show where this kind of comes from. So when you come over to this point right in here, this is that new zone to look at. So this might be a couple little areas to look for a buy if you want. But with this breaking a previous shallow fib like this, I won't look until the 61.8% level or even further. But we'll have to see. I take baby steps. I don't really go like it's going to go to 70K or 60K or anything like that. If this ends up breaking, this target right here is going to be my next one to watch. And then I'll buy it. And then if it wants to go further, then I'll stop it out again. So you want those small losses on those and then the large gains on the trend. And that's really the whole goal, is to really mitigate. Now, this is another thing that could be happening is if you just join the group now, you're going, well, shit, you're losing, but yeah, but you got to remember that we probably took, 34, I don't even know how many percents I made off the 4 hour here on the way up. Yeah. So yeah, if we take a little bit of a hit, if this ends up getting out, with 3 settles underneath there, and I take a little bit of a loss there, maybe, 10%, it might be a 10% loss on that, but I think I had probably 80% in gains on the way up. So that net of 70% gain is nice. So if you join a group and all of a sudden you're in a few losses, you got to kind of look back in time of what's been happening. Because a lot of people come in and go, man, we're getting killed. And I'm like, yeah, we are at the moment, but you got to look at the long-term picture of how the whole thing works over time. But right now, still looking good with the buy in there with the 4 hour going. So
real quick, let me just say something about that.
Yeah.
That's what I was talking about earlier, where generally new traders come in and they focus on the single trade they're in. Each trade is individual versus focusing on the system itself. And so again, you're not going to be 100%, guys. Okay. You're not going to be 100% like Fib was saying here, but if you're focusing on the system itself, the system should produce results over time. And that's what you're looking for. Your equity curve will never look like this unless you get a win, and that's all it is one win and one trade. But your equity curve, needs to look like this, right? And along the way, it's going to go up, it's going to go down, it's going to go up, but you're looking for it to make, like on your charts, when you're bullish, you're looking for it to make higher highs and higher lows along the way so that your average over time is continuing to rise. And I think that's one of the most important things we might have said on this stream today, because it is that one point that most traders just coming in don't even understand. They focus on, oh my God, I'm losing money, and that's it, rather than, well, what are we doing, as far as the system goes over the course of a year, over the course of 10 years, consistently.
Yep. And that goes back to another risk management thing, is to don't be overexposed, have small trades. So if you do take those losses, you're not putting on half your capital and then you take a loss, that you just got to really watch the exposure also. Yeah. So, because a lot of times, even though, it just depends on how much you have in certain buckets. Now, I have a little bit more in my BTC bucket than I do, say, a Solana bucket. Like a Solana bucket is going to be pretty small because I don't like the risk that those kind of markets have. So my exposure is going to be a little less. But it doesn't mean that over time, I'll have smaller gains. Maybe I'll only have 2 or 3% or maybe 6% gains. But if I have those over time, that's fine. But then it's this market that might have a little bit larger gains and then smaller losses. It really just depends on the asset and those kind of things. So, but that's where we're at on the 4 hour. We came down, hit the target. got long again and worked our way up. So let's move over to the daily. This is where I'm also kind of confident on the 4 hour to get long while that previous shallow fib is hitting, because the daily is still maintaining a bullish structure. Now we had a nice correction, and that's another thing I actually tweeted out on X was the difference between a crash and a correction.
Yeah.
Because right now we've been coming down, and yes, it looked if you look at it in absolute dollars, it looks like absolutely insane. When you look at it from a percentage basis, this correction doesn't look any different than a lot of them that we've had on the way up.
Exactly.
So to me, we're in a correction. It's not a crash. A crash to me is chaos.
Mhm.
Like things are just absolutely just a shit storm. Nobody knows what's going on. The thing's just going who knows where. That's a crash to me. Something that's probably 20% or more on a movement to the downside is a crash. Now a correction is something that is a little bit more where reason starts to come in. It makes sense in a market to actually kind of reset itself. You're getting up to 108K where I had a target and took profit on some, and a lot of other people were going to take profit. The things moved up really well. It's time to, ease, kind of take some of that profit off the table. And once that happens, then you get that snowball effect of like, shit, I better get out before it gets too far. And then you get this little bit of a correction. But one thing that we're noticing on this move to the downside is a couple of things for me. We definitely had some buying interest to come off the bottom of this zone. And if you follow me, the 127 to 141 is typically that first line of defense of a possible reversal. And as we rallied up here on this move right here to the upside, this area right in here becomes really good support. It tried to break right here and then came back down and hit support right here, and then went up and then made that high at 108 and change, and then came back down and found support there and found buying interest there again. I like to see that from my system, is where that support on the fibs is coming into play. Now the shallow fib's a little bit lower than that at 89.5, which I have a limit order in there to buy, which it didn't hit. It would have been nice if it came down to hit, but that's the nice thing is the 4 hour did hit. So I do have some exposure on the move to the upside. So there's support there at that range. And then the bear zone did not hit. Now, even if it would have went into the bear zone below 92.7, which the low, today was at, it got pretty close. Actually, it got to 92.1. So at one time it was in the bear zone. But again, you got to wait for the actual settlement for that to come into play. But then it popped up with some buying interest. So we're still in the bull zone. So support being found there and the bull zone still being maintained. I like that scenario to where I'm wearing the Santa cap. So hopefully we start that Santa rally and start getting back up toward those previous highs. Now, can it still go lower? Of course. And that's why risk management is in play. I will buy the shallow fib at 89, even though it would be in the bear zone. It would take the 3 daily settlements underneath of it to get me out of that. So when you look at this daily, again, same kind of thing. And this is probably an easier picture. You rally up to this point right here. You rally up, and then you buy the shallow fib on the dip. It actually dipped a little bit lower right here. But as you can see, the bull zone did not break. It did not go into the bear zone. So any buy you had in here, you were holding until it made a new high. And then it made another new high. And you can see it came right down to the shallow fib and got filled again. So you're stair-stepping your exposure on the way up. And then you get another one right here as the high hits right here. And then it hits the shallow fib and then goes off again. So that my whole goal is to stair-step that. And of course, I'm going to take profit on the lay. So I don't have all that on here because I cleaned it up. But if there's other areas to take profit on the way up, you're going to take profit, buy that dip, take profit, buy that dip, that kind of thing. And then we got on this nice long run here. And then as you can see, now that we're hitting this high, it got nowhere near the shallow fib, but it did hold this support once it broke this level, which is typically that first line of defense. And if it would have broke back down and got 3 settles back underneath this, then yeah, we probably would have broke down and got a lot down further. but it didn't, and it made new highs and went up to this point. So now the shallow fib's here at 89.5 or so, trying to get bought there. So stair stepping, target, stair step, target. And as long as the bullish structure's there, I'm going to be bullish. I'm going to have exposure to the upside and those kind of things. So that's where I'm at. I'm only 10%. I'm 10% long still because I took profit on some of these other ones. I'm still long from, I think 86,000 or something like that. I can't remember. So even if we went into the shallow fib and got underneath of it, that last 10% should still be in the money a little bit, unless we just completely fall out of bed. But I'm really willing to take that risk and then, buy more if it gets, making new highs and those kind of things. But that's not really shown on this chart. But overall, target's still there. The 10% that I'm long has a target there at the 200%. Because since we had 3 settles above the 141%, the 200 becomes my next target, and that's at 117.7. And then if you want to go even further, we can look other charts, but that's what we're looking at on the daily here. So still looking good. I'll show the weekly real quick. I covered a lot of it with Crown this morning, but there's a lot on this chart. But the main thing I want to show on this is 2 things. One, this trend line right here is going to be my line in the sand here for your first line of defense on the downside. So as we move higher into some of these upward targets, the break of this trend line would be that first red flag that we could be going into an overall primary bearish market. But we're nowhere near that. So that's one of the things I'll be watching as we get higher highs here, moving on into 2025. And so this trend line is going to be a key level. Now, definitely in the bull zone, this can go all the way down to 60,000 and still be a bullish market. I know that sounds really weird, but that to when I say a bullish market, to maintain the primary bullish trend overall long term. Now, of course, near term would be bearish if it's going to go all the way down to 60K. And then that's why we got safeguards on the 4-hour and the daily. If we break those levels, we're not going to want to be in it. We're going to be waiting for those downside targets instead of riding the trend to the downside. That was one of them. The other one is one of the things I'm watching is this low before these rallies. On a nice cycle, you got a low rally and then you made a low rally, and then I'm looking at a possible low in June, but that's as some of my upside targets here all the way up to 146 that I'm hoping that we would get to, hopefully in the first quarter. That'd be very, very nice.
Yeah.
And then work our way down to around 94K in June, and then much further off into next year with some higher highs up above 190, 210, 230, 280. Who the hell knows? But hopefully we'll get up into that range. So that's where we're at with that. That's all I really wanted to show on that. Watch the video with Crown. I go into a lot more detail with that.
When's he going to drop that?
But I think we're losing you, Chris, and me.
Wait, what?
The camera has gone away.
Oh,
I don't know
can't.
if people can hear us or not.
Can y'all see him and hear him? Bibbo, you hear me?
My internet connection is still strong, so I don't know.
Oh. Y'all got me here? We lose. Diego says yes. Y'all are saying yes. Yes to what? Yes, you can hear me, or yes, you can hear Fibbo? You can see both of us okay? You're with me. Okay, so you can hear me and see me. So we lost Fibbo. Yep, we lost Fibbo. He'll be back in a minute, guys. He just said, "Oh man, my internet connection is working great," and then we lost him. We're just trying to make sure you guys are keeping up and paying attention, not sleeping here. So we'll see if he can get back on here, guys, and we'll bring him back on. Here. What a Friday before the holidays, huh? By the way, guys, just so you know, I do think I can make some time next Friday to do a Friday show. I'm actually going to be off from TWC for most of next week. But Yeah. Oh, wait. Fibbo's trying to get back on here. So yeah. But I'll try and be back on next Friday as well. So you guys can watch for that. Can you hear us, Fibbo?
Yeah, I can hear you now.
Okay, you can hear us now? All
yeah,
right.
my internet's fine. I don't know if it's StreamYard that had the
Don't
problem.
say your name. It's fine. Everybody saw you disappear. Everybody's still talking to me. It was your internet, man.
I don't know. It looked fine to me because my internet was all working fine. The StreamYard wouldn't work for some reason. I don't know what's going on.
You're having that same issue that Tillman has sometimes on Wednesdays, except he's living up in the mountains there in Colorado trying to use that Starlink. And every once in a while, kind of loses him.
All right. Well, we covered Bitcoin. Unless you got something on Bitcoin you want to show.
No, we can just go with your charts here. I know you've got a few charts here. Let's make sure the folks get what they're here for.
All right. Let's go on to Ethereum. This one actually stopped out. I got stopped out on this one because the previous shallow fib here had 3 settles. So I actually got out right here, right about that point. It dropped, didn't get my target. Dang it. I had a limit order in there and I didn't get it. Plus I was busier and crap. I probably would have bought it being close enough, but being busy this morning, I didn't change any limit order. So I kind of missed it, but I like it. It would have been nice to get long in here because we kind of went into this oversold conditions on this. Typically when you get outside of the range that I have on my zones here, typically it's a good bottoming signal. It'd be nice to have gotten long there, but I haven't. But so what I'm going to do now that I got out of that and I tried to rebuy, I'll probably be waiting for a new bull zone, which we'll have to wait a little bit because it has to get all the way back up, way up here. Or if it continues to drop back down here again, I will buy it again. I'll buy at this level and then stop it with 3 settles underneath. Because if we get 3 settles underneath this, that could be pretty ugly. As you can see, there's not a lot of support underneath there at all until I get back to the start of my threshold all the way down here at 24.20. But right now we're getting some buying interest off that dip. So just like we did on BTC, we got a nice move to the upside. I just missed it. Which is fine because Ethereum is not.
You're showing them. Listen, they're not the only ones that kind of just miss it. It happens to us too. It is what it is.
But I'm not going to chase it either. So that's the thing because my plan says to buy at that level. It doesn't say buy it at 34.42 because it bounced. So I'm not going to do that. So I'm just going to wait and be patient and look to other things. But this is exactly what happened. We went into the bear zone. I reduced all of my exposure to 10%. And then once it got down here, I actually bought right here because I had a limit order in, and then 3 settles later, I got out of that position and the one I had that I was carrying over from the first time. So now I'm out on Ethereum on the 4-hour. So I'm just gonna have to wait for a bull zone on that. So which is fine. To me, once that gets reestablished and it gets back into a bull zone, I'll be a lot more comfortable and a higher probability of actually making a good trade when the trend is back established and going back the other direction. So that's the ETH on the daily or on the 4-hour.
Yeah, wait till you see this daily candle. And Eye of the Tiger, man, thank you so much, buddy. I appreciate you for the super chat there. Definitely.
Oh yeah, awesome.
And I see you're about to talk about the daily here. Real quick question from Zuka here says, do you think Ethereum is lagging in terms of its performance compared to Bitcoin?
I don't know because I don't really compare them. Because I don't always have a good answer for people that ask that because I look at everything individually. Yeah. So I don't know the difference of comparing the two because to me, the psychology of the people that are trading Ethereum is way different than the psychology of the people that are trading. When I say people, retail, institutions, individuals, grandmas that are trying to make money, you don't know. So to me, the Ethereum market is separate, but when you look at the patterns, everything's looking pretty similar. So to me, I don't know if it's lagging or not because the patterns are looking pretty similar. Now, the one thing that didn't happen is that this didn't get filled down here. But then again, when you look at BTC on the 4-hour, it's only hit the 38.2. It didn't go all the way down to the 61.8% level. So if you're looking at it from that aspect, then maybe Ethereum is lagging a little, or is um, dropping further than BTC at the moment. But the pattern's still kind of holding the same because they both went into the bear zone, but one of them did stop out and BTC didn't. So I don't really like to compare. I just like to look at them individually and trade each asset as its own, as its own set of psychology. So I don't really have a good answer for that. If you have an answer for it, Chris, that'd be awesome. I don't.
Again, I kind of follow with you there, man. I trade the charts individually. I don't worry about what's not that, I'm not out here trying to find the absolute perfect chart to trade. I'm saying, listen, is it a tradable opportunity? If it is, I'm going to make money on it. And I just do that over and over and over again. So, we also have to remember that overall returns right now on Ethereum are less than Bitcoin. Ethereum's up 300 somewhat percent at its recent high here. Bitcoin's up 520 or 25% at its recent high.
Yeah.
But we also have to remember that Ethereum hit its bear market low, almost 6 months, 5 months prior to Bitcoin. So it started out ahead of Bitcoin. So, everybody wants to know what are things. It's like Bitcoin miners. Everybody's like, oh, they're underperforming Bitcoin. Well, maybe this year or this last half of the year.
Yep.
But since the bear market low, most of the miners are 2 or 3 times more than what Bitcoin's done. Bitcoin again at 500%, you got miners at 1,400, 1,100, 900%. So overall, this market, miners are still outperforming Bitcoin. So it's always just, I wouldn't focus so much on your times, guys, your timetable. What time is it? Oh, is it, because then people look and they go, oh, like I said, it's underperforming. Well, maybe overall and maybe right now, but there are points where it's been outperforming. So, again, guys, I think one of my best things that I ever did with trading was just like Fibbo does, is just look at the charts separately, find tradable opportunities and trade them, and not worry about, oh my God, I could have made more here, or whatever's going on there. Because if you're doing that, it's always an emotional decision, and emotions get you killed in trading.
Yep, and by looking at each one individually, it helps me keep the emotion out of it. Looking at other markets, like, oh my gosh, that one's going that direction, this one should go this direction, and it kind of messes with my head. So I kind of look at everything separately. But looking at Ethereum on the daily here, we had this nice bull zone, had some good trades on the way up here. Actually hit our 200% at 40.38 right here. Nice. Sorry, but I still had some. I think I still had 10% on. But as it went into the bear zone here, I didn't do anything because I still had the 10% long going to the next target up here at 44.95. And as this broke down here, and going into the bear zone, like I said before, the rule is it has to have 3 settles below this previous shallow fib for me to get out of that 10%. Even though it wicked all the way down here, and to that point, this is the low here at 30.95. Found a lot of buying interest, just like we did on BTC, and worked its way up. So we got this nice,
beautiful candle.
Yeah, absolutely. So we've had one settle underneath. Right now this is a daily, so we got a lot of time left. It'll take 3 days of settlements underneath this for me to get out of that exposure. Otherwise, I want to hold on to that 10%. And if it starts to crank back the other way, and we get back into a bull zone, I want to press that position and get 20% long, and then I'll have this level right here at 44.95 as a target. As we go into a new bull zone, there'll be another target that'll be in here somewhere. These other targets were from other things that if it would have kept going, this is where another target would have been. But I'm just kind of showing you on, even though we went into a bear zone, the overall structure is not bearish yet because we're still at this point. Another reason why, if I would have been around and following this and trading it and not having, if I would have had time, I probably would have bought close to this. If it started to go up here, I probably would have bought here just because of this reason here, that we're not bearish on the daily. So I'd be a little more comfortable getting in prior to my target. But that's really guidelines, not rules. It's more along the lines of, I don't have a lot of exposure right now. I can add it. It becomes the risk management play. I don't have much on. I'm willing to take that risk, that kind of thing. But of course, I didn't get filled, so we just kind of move on. But I like that I'm still 10%. So hopefully we can get back above this. And again, the settlements have to be consecutive. So if this actually goes back up and settles the second day back above it, then it resets. Then I'm going to need 3 consecutive settles. So it would take 3 more days underneath that to trigger a bear. So are we on the threshold of possibly going bearish? Yes. Is it bearish? No. To the point where, yes, it's bearish because we're correcting the market, but we're not bearish as in reversing the market.
Yeah.
So that's something that you got to kind of keep an eye on there. But everything looking good. And this could be a nice little let me put nice little trend line in here from the breakout point on these lows right in here. Even though we wicked it down, if I move this over, this is still above it, and then we're back above it here if you want to and I'm just taking that from the break point of the trend line there, just as a possible support point. But everything looking good there. Since I did a BTC weekly, I thought I'd throw the Ethereum weekly in here. One of the things I like to do, and I do this all the time with the trend line breaks and the objectives. I always take the furthest point to the trend line itself. And again, this goes back to making sure your trend lines have some validation, not just draw lines and do it all over the place.
Yeah.
But this one was definitely significant, being in the bull zone, went into the bear zone right here after about 3 settles, and then it started to break down. You take that furthest point, take that same rate of change from the break point, and it hit just nicely. So going the other direction has not hit that target yet. But that target is up here is pretty close to this 200% at around 59.60. The actual trend line break is at 58.80. If you take that same rate of change from the break point. Now we went up, came back down, and got some of these lows in here, but all it was doing was retesting that support at the break point. Yeah. So this target is still in play, and definitely came down and tested in here. To where it did not go into the bear zone here historically when you look at the ranges, and kept the bullishness going. So when you look at it from a weekly standpoint, we're still got that structure to the upside. So I still got that target to the upside here, which is at 58.80. So when you look at the daily here, that's where this kind of comes into play, where the 200% is up here pretty close to the 5800. So yeah. I kind of want to leave that in. So if this gets back into a bull zone and we get bought, I'm going to like that as a target to the upside because there's a nice weekly target off the trend line break there going that direction. And just like BTC, looking at some of these trend lines this way, as you can see, this is a nice little trend line going this direction. Yeah. So if this breaks down that way, you're going to take the rate of change going this direction. And then whenever it breaks, you're going to take that rate of change as a target to the downside. So yeah. So that's ETH on the weekly. We can move over to gold. Gold stopped me out because we went into the bear zone. As you can see, if you would have went into the bear zone right here, you were already well under the 31, the previous shallow fibber, which is way the hell up here. And that actually worked its way down. If you wanted to, you could have bought in this range. But what I like to see is 3 settles underneath, and we got it right here. So the 200% becomes my target. So while we're in the bear zone, I'm either going to be waiting for a move all the way to the downside here for gold on the 4-hour at 25.67, or a new bull zone, which comes in around 26.68 at the moment on the upside. And so again, I'm waiting for the downside or a new bull zone. Otherwise, I'm in this what I call liminal space. I'm waiting for the threshold to either go back bullish or get down to a level that makes sense while being in the bear zone. So the bears are still relatively in control. So even though we went up here on the 4-hour and really haven't made a new higher high here, I want to maintain that bearish structure to possibly get in long on a target to the downside there. That's on the 4-hour. Now, when you go to the daily is, even though we went into the bear zone, almost went into the bull zone again. But again, this went down, did not have 3 settles on here. So any 10% longs that you had in this market, you've just been kind of holding here for a little bit, waiting for the upside target, which is at 29.23. And again, while we're in the bear zone, I want to buy this target at the 38.2% level, which is at 25.13, which is pretty close to the 25.67 here. So you got a couple areas to watch on the downside to buy while in the bear zone. But then when you look at it from a long-term perspective, it hasn't had those 3 settles. So the daily is still very bullish, even though we went into the bear zone. That a lot of times people will get confused on if you go into a bull zone or you go into a bear zone, a market can do a couple of things, right? If you go into a bull zone, it could just go into bull zone all gangbusters and freaking lot of momentum and just freaking nuts, right? But then you could also go into a new zone and be consolidative. It could just start to trade sideways inside a range. And that's what's kind of happened here going into the bear zone. We went into the bear zone, didn't really break into a bearishness. So we've been in this period of consolidation. So this is where patience comes in. If you're still long that 10%, you're still hanging around waiting, and it hasn't really made it up to a new high or a new target. But then again, we haven't went bearish yet either. So since it's in the bear zone and you can add to that position while still maintaining the bullish structure, that's what you want to do. Hasn't come down there to do it yet. But if you are long 10%, you're still hoping for those upside targets because we haven't went to an overall bearish market long term. So hopefully that makes sense.
Potentially even a triangle printing there, by the way, off that all-time high. You get A wave down, B wave up, C wave down may be complete.
Yeah, you're talking about this.
Here.
Yep.
Yeah, because it looks like they're all 3 waves coming down. So I had a lower target. I was looking for an A, a B, and a C coming down toward the 38.2. But this morning, it's 3 waves down off that most recent swing high, and we're getting this rally this morning. So if we bump up there in that middle one, right around your 100%, your black 100% there should be a second wave kind of pulling up from the top, from the local top. Right there. Yeah. This looks like it's 3 waves down right there. That second wave pulls up right around the 100%. So, if we're breaking above there, I think we might have a triangle going on there. So let's see, A, B, C, then we'll have D up and E back down before it pops out. Yeah.
Yep. And another thing is when you look at the fibs over here, one thing that I talk about a lot is the 127 to 141 being that possible area of a reversal. Yeah. If you look at it, even in this little environment, it comes up to that point, and as you can see, it touched right in here, right at that zone between 27.34 and 27.56.
Yep.
So that's that first line of defense of possible reversal, and not reversal as in primary trend reversal, but a reversal in the move that we saw to the upside from that latest leg, and then it started to work its way back down here and is hitting support from right in this point and then we make that trend line. So yes, consolidative, but I'm waiting for a breakout for the bull zone. Right now it's showing 27.99, which would be just above this 141 here. So once this gets back above this trend line, most likely we would probably have 3 settles above it, and then we would be above that point, and then we would be above that fib extension level. That's that first line of defense, which would flip it to support instead of resistance, and then we'd be off to the races to our next target. So just depends on how you look at it, but the way you're talking about with the waves makes sense, and then also with the way I'm looking at it on the Fibonacci
line right
extensions.
with it.
Yep.
Yeah.
Dollar, crazy.
Dixie, man.
Yep. Went into I have not been trading this, but this is what it looks like if you were. I just kind of took a break on the dollar for a while. It went into the bull zone at this point, as you can see, started the fibs, worked our way up, got right to our target. In this case, was a couple of different targets. There was one at 107.73 that hit right here, came up and then came back down. So if we same kind of thing, if you would have went to the high here, you would have been buying in here at the shallow fib, working our way up to this point, did not hit, and then we had to keep working our way up. But this target right here at 108, 108.29, which was right here at 108.3, is kind of where this target hit, and then worked our way back down. You would be buying right here at the shallow fib because we're still in the bull zone. So if this actually goes into the bear zone, you would most likely would already have 3 settles underneath here. So you would get out right away on any longs that you have. But you probably would have been long in here. You probably would have taken a profit right in here. You probably wouldn't have got this. But then you would be reestablishing this. So if you did not, it depends on how you trade this, but if you got out here and it dipped down and went back up to the high here and it comes back down to this point, you can still use this zone here as a target for this buy. So if it comes back up, you can actually work your way up into this point and take profit. Or if you want to be more aggressive, you can wait for the 200% at 109.37 off of this buy going forward. So right now the dollar is still looking at on the 4 hour, still looking pretty bullish. Not super bullish, but enough to where support's being held to where that could be happening to the upside. SPY has been nuts this morning. If you were following this one, went into the bear zone on this candle right here, set the fibs. As this came down, you would want to have, I don't have it on here because I changed a bunch of things, but you would have already been well underneath the 38.2% level, which isn't on here, but it was up here somewhere. Yeah. You would have been out. And then you would be looking for that first line of defense on this. And it's going to be hard to tell because like before, you have to look where the first 200% is and then go back in history for the next support and those kind of things. And that's where this 100% comes into play. So the zone here comes in at 59.03 to 59.28. And this low, which started this run. So if you had a trend line that came in here, this is kind of the start. And this is a nice spot to look for inside this zone here. And that target hit right here. So this was a buy right here. It dipped down, then came back up. So just like I said before, first line of defense is that buy in this zone. And you would want to look for 3 settles underneath to get out. This one worked down, came back up, and now we've been off to the races. So this buy right here, while in the bear zone, typically what I would do a trade on this, since it's the futures market, I usually get out a little earlier than others. You would have bought and you would have sold at the shallow fib. You would have been out on this right here. You wouldn't have captured this. That's the way I did it. I didn't want to tell people, but I did trade it real quickly. I didn't have a chance to even put it into the chat.
Yeah, moving. Yeah,
it was too quick. But I got out at the shallow fib. I didn't get any of this, which I'm fine. I'll take what I got.
Well, that was still what, 62 points there?
Oh yeah, no, don't get me wrong. It was huge. Yeah, it was huge
in such a quick time.
It would have been nice to have all of this, but again, sticking to plan, doing all that. So in other words, we're in the bear zone. As this comes up and I got out and this worked its way up here, I'll either do 2 things. As this drops back down, I can rebuy here and then stop out on the 59.03 area, or I could just wait for the full 200% and get back in here. Now that I've traded that and made that profit, what I will do is I will wait for a drop all the way down to 5,800 and buy down here, or I'll buy a new bull zone. And the bull zone right now is at 61.19, not quite there yet. But if it gets a new bull zone, then I'll buy it, and then I'll have a target. Most likely would be this level up here at 61.36 once I shift everything into a new bull zone. But that's not happening. So now that I'm flat, I'm just going to either wait for a target down here and just be conservative, or just wait for the bull zone. So that's all I'm going to do there.
No, you said bull zone was 61.19, right?
That's what it'll do once it triggers into that.
Okay.
Yeah,
Okay.
so
I was like,
so
no,
ba-
with 61.19, you're going to be above new all-time high there for a target.
yeah,
Is it
like if I put in if it actually went into the bull zone, just say it did go into the bull zone here, all of this would get shifted over. So what would happen is I would move everything over like this. And even though it went into the bull zone, you still need 3 settles above this, and there's only one.
Yeah, well, not even
So
one yet. It hasn't settled
yeah,
yet.
not even one yet because it's not settled. But yeah, if it will in another hour or 48 minutes, and then if that happens and it just say it went into the bull zone, then I would need 3 settles to buy it and then go. Or we can wait. Since this is a 4-hour, this 4-hour is going to trigger, and then maybe the next 4-hour triggers above this level, and then if it gets into the bull zone, that will be the third one. Then it'll be a buy with the upside targets. But
Nice.
we're not there yet, so we're going to keep it just like that, and wait for a much larger move to the downside or new bull zone. We'll see what happens.
We just love
MSTR.
waiting as traders, don't we?
You what?
We just love waiting as traders, don't we?
Yeah. Well, I mean, like you said earlier, part of risk management, you talked about a bunch of different things, and patience is one of them.
Yeah.
And that one's going to take a lot of patience. But the best thing is just to set your limit orders and walk away and don't even look at it. If you trust your system and you trust your risk management and all that, yes.
I'm telling you, you said the perfect thing right there. I'm going to stop you one more time here real quick.
Yep.
Guys, listen to what he just said. Set your buy and your target, whatever, and then stop looking at it. One of the worst things you do as traders is you sit there, you go into it and you babysit that trade. And you sit there and you watch it. And it's not moving fast enough on the 4 hour, so you move to the 1 hour. It's not moving fast enough, you move to the 15 minute. Next thing you know, you're staring at the 1 minute, watching it go, and it's driving you freaking crazy.
Yep.
One of the worst things you can do as a trader is to get into a trade and sit there and watch it. Get into a trade, set it, get the hell away, go do something else.
Yep. And another thing, a lot of times what happens is a lot of people will be like the market will wick down and wick back up.
Yep.
And it'll be like, how'd you get that fill? I'm like, well, because I had that limit order that's been sitting there for 3 weeks. That's why. And then it finally happened. So that's another thing that you can capture. If you, of course, you're going to have confidence in your system and all of that.
Yeah.
So when you have that order in there and you walk away and it wicks down to the point and you get filled and then it rallies on up out of there, then you come back and you're like, wow, cha-ching, this is nice. But if you don't do that and like you said, you're following it and you're looking at the 4 hour and then you're going to the hourly and the 15 minute and you're starting to, then all the emotions are starting to kick in and you don't want that because you're going to end up chasing the market. You're going to make bad decisions. You're going to get in when you shouldn't. You're going to buy it. And it's going to continue dropping. And you're like, shit, should I buy it more of it and dollar cost average it? And the next thing you know, it's falling more. You don't want that. You just want to follow the system and kind of go with it. MSTR, everybody's been asking about this one too. Bull zone came up, hit the target here at 513.47, has since come down to fill at the shallow fib at 391.62. Been a little bit of consolidation, has actually dropped a little bit more, but so far it's alive. It's alive and kicking down here in the bull zone. So it hasn't went into the bear zone yet, but it definitely got to the point where it's getting into the ADX is showing consolidation. So maybe we'll consolidate in the zone in here for a little bit. But being long at the shallow fib is where we're at the moment. If it does end up going into the bear zone, you'll end up getting out because you're already 3 settles underneath. 1, 2, 3. This green candle is actually the 4th candle underneath underneath the shallow fib. So if it does go into the bear zone and clicks and this is the daily. So if it ends up clicking here in the next 2.5 hours underneath there and it takes it into the bear zone, you're going to take that loss. You're going to want to get out. And that's okay because you were long from here and getting really good percentage going this way. So if you take a little bit of a loss here, it's not the end of the world. But so far, if you are still long or long at the shallow fib, you're still alive. And the target up here at 655 is still in play on that. So yes, we've corrected. Daily is still in the bull zone. So right now it's still alive and kicking, but then again, risk management will come into play there. Coinbase, same kind of thing. We had a lot of targets hit, go into the bull zone, target hit, that kind of thing. Worked its way down. Shallow fib was at 284.56. You would have bought. We're underwater at the moment, but still in the bull zone. So it's the same kind of scenario. Is it's correcting, but it's still maintaining the bullish structure on the daily basis. So yes, you might be losing a little bit right here, but you've gained a bunch from this. So you're following it. That's what I like about trend following systems. And that's why I built my system around it, because I don't have to be in front of the screen every second of my life. So I can follow the trends, take a little bit of losses when it starts to reverse a little bit. Sometimes you don't. Sometimes it holds and it continues, and that's what we want. So right now, if you're long at 284, you're still alive, and that target at 391 is still in play toward the upside. So that is coin. And then I was asked to do Intel. So I did a quick one here on Intel. That one is actually in the bearish zone, waiting for a buy target down here. There's a fib extension zone from way back, fib extension out here at the 127% at 1770. And there's also a 200% off this recent bull zone here at 1763. So somewhere between 1763 and 1770 is a buy target while being in the bear zone for Intel. I have a trend, the trend line objective is roughly about 1839. That could be a spot you could buy if you want. I will wait for the target down here at 1770 to buy to buy while in the bear zone. So right now I want to respect that bearishness at the moment. Now, when you look back at a lot of these other things, I don't have all the fibs in here, but as you can see, it went into the bear zone here, clicked into a bull zone right here, and then went back into a bear zone, then clicked again. But if you took the fibs from the point of starting this bear zone and then down to this point right here, as you can see, even though it went into the bear zone or bull zone here, it did not get back above this shallow fib right here. It touched it, but you needed the 3 settles to get it back going bullishness. So it basically stayed in this bearishness this entire time all the way down. So if you were waiting to buy this, you were waiting a long time if you wanted to do this. And then I just put these other trend lines in here as just guidelines to show once this kind of breaks out of this, it'll probably go to this right here, this little gap area right here. So that's where I'm at on Intel. I'm not touching it until, I won't even probably trade this, but if it got down to this point, that's that first, what would you call it? Like a eyeball trigger, maybe. Like, I might buy it, I might not. If it gets down to 1770, I'll look at to see how things are looking, to see kind of what's the risk reward, that kind of thing on that. But a little bit of bearishness on Intel as we work down to the target of 1770. That's where I'm at, and that's all I got.
All right. Well, let me go and pull up my Intel here real quick. My Intel chart.
Your Intel of your Intel?
My Intel of my Intel, yeah.
or of Intel?
So we've got this long range it's been in since when? Since the high here. These are the 6-month chart in 2000, 2001 area here. So we had, a pretty clear 1, 2, let me see here. Looks like ABC, and then it looks like WX, maybe Y here. So it looks like 3 down, looks like 3 up, which means this is starting to look like a large flat. And so I have a 1, 2, 3, 4, working on the 5th wave here, coming down toward the swing low. You can see on the 6-month here, the volume's picking up. So, we usually get that toward the end of a trend. We get that capitulation point. Zooming into the monthly here real quick. Again, the idea
what's your target down there? What's the
What was that?
target on that? What was the target on that 6 month on the downside?
I don't have a target on the 6 month.
Or
I'm just kind of
support
generally
target.
looking at this as a flat. So I would look for it to get down into this lower area here. Right here. Here's the thing. We've got a 1, 2, 3, 4, and potentially a 5 finishing up. So your $17 and change target, or maybe even down here toward $15, potentially. You can see that we've got this this bullish divergence here on the weekly RSI coming in as well. We had the big volume here into this capitulation candle, and a little bit slightly lower here. We rally back up, jump into the weekly based on the height. This does appear to be 3 waves, so this looks corrective. So we should expect a further move down. Based on the height of that, we've got a pattern target around $15. Doesn't have to get that low. We'd be like a 1, 2, 3, 4. Could stop prior to that, even in the 17s there. But again, we will end up having bullish divergence here on the weekly, similar to what we have on the monthly there. Weekly stochastic RSI almost resets. So I think maybe this kind of continues down through the end of the year. And maybe right at the end of December, beginning of January, this thing may catch a bid and head up to new all-time highs. So I'm a little bit interested in it. They've had a lot of issues over the last, especially over the last few months, new CEO now, all this kind of stuff going on. But see, guys, this is the thing. If you zoom out, this is just range trading since 2000, 2001 to now. That's 13 going on 14 years, something like that. We've been sideways.
Crazy.
Absolutely crazy. Yeah. Volume dropping off throughout the range here, kind of coming up a little bit on the move down, but we just get, again, this 6 month candle getting some volume in it. So generally speaking, looking for that a little bit further move down, and maybe we hit 15, but looking for it to get kind of down into this area. You can see on the monthly here, we do have a low volume node here, which is where we caught here and here, which is what we would normally expect. So we'd like to see it continue to respect that and head back up. But I do think if we do catch it around here, that we are going to head up into a new all-time high, and Intel can finally catch up to, well, not catch up to, but at least kind of pump out there a little bit, unlike all the other chip makers who, AMD and the rest of it have really been doing pretty decently since that time when Intel kind of topped out at that all-time high. So yeah, I kind of like that. But anyway, guys, listen, we are done. It's been
actually one more chart.
Oh,
or I shouldn't say one more.
Here's an extra gift, guys, from Pivot Santa.
Well, so I just saw on the somebody was asking for bonk a couple times, so I thought I'd update mine real quick. So looking at bonk here on the daily, went into the bull zone, had a nice run to the upside. Target hit, which was nice because, like I said, this is the first line of defense of possible reversal, and it happened exactly nicely. If we would have had 3 settles above this, then the 200% would have came into play, but it didn't. Worked its way down, started to correct, and got down to into a new bear zone, and setting the fibs. The target for that is the original threshold down here, which would be 2218 of where the buy would be while we're in the bear zone. So if it gets down to that target, that's where you'd want to buy. 3 settles underneath that, and then you'd want to get out. Probably want to look down into some of these lower targets beyond that, but you might want to be looking much further if that ends up breaking to the downside. So right now you're looking at 221896 after 4 zeros on that, but that's what we're kind of looking at. You can look at a couple different trend line possibilities. This has already happened to the downside. So if you took where's my arrows at? Where my arrow? Where is it?
You just had it. There it is.
Yeah, there it is. For some reason, my screen went off the edge there. That's what happens when you got too many screens going. So if you take that and take that same rate of change from the break point,
just about there. So
this zone down in here is going to be your buy zone while in the bear zone, but stop it if it gets 3 settles underneath that. That's bonk. That's it. I just saw it in the chat. So whoever had it, you're welcome. I had it all ready to go.
You were saying 3 settles below 22.1896?
Yeah. That's where the buy is. And then if you get 3 settles underneath that, it's the stop. If that ends up getting underneath there, I probably would wait a while all the way down to here. Because just like on the other side, you want this. I mean, the zone's going to be pretty wide, but
yeah,
the 127 might be a spot. But then again, you got a lot of lows right in here, so you could look to just buy the low and then stop it out if that new low hits, that kind of thing. But right now, the target is at that point, 22.1896, and then hopefully get bought from there, head higher, get into a new bull zone, off to the races.
Cha-ching into the new year, right?
That's right.
All right, man. Always enjoy having you here, buddy.
Oh yeah, no fun, good times.
If you guys would like to learn more, from what I teach there and what Fibbo teaches, we've come together there. We're doing this whole thing with the Traders Club and everything. $97 a month, guys. Absolutely insane value. The price is going to go up here in the next month or two. It's just 97 is way too cheap for everything that we're doing there. But TWC Traders Club, where you can jump in there and trade with us, and of course we give all our risk management stuff in there as well. It includes all the group coaching that up until just recently, we've been charging $3,997 a year for. And then of course, Fibbo's threshold theory as well. You'll get access to that and learn that proprietary system. And party with his elves and whatnot in his group there as well. But it's only $97 a month, guys. Go to TexasWestCapital.com. Feel free to hit us up if you got questions. You can do it there, especially on X if you're on X. Do that. We'd love to answer them. But, I said at the beginning of the show, guys, I'm going to say it one more time here. You really have to look at, are you serious about putting in effort that you need to, right? Neither one of us are here to have you in there if you're not putting in the effort. We don't need the money like that. We're trying to really help you out here. But we can't do it for you. We can sit here, we can tell you what it is, we can tell you what's up and how to do it and all these fun things. But you actually have to put forth the effort, the discipline, the focus, the commitment. You have to do all that. And so again, we do get people that come in and they just kind of half-ass it and then they leave and they go, oh, it didn't work. Well, it didn't work because you didn't work. That's the thing. And, with trading and anything else in life, you have to be honest with yourself. Am I really putting in the effort and commitment in there? The one thing the U.S. Marines are really good about is tearing you down and building you back up together as a group. And in the process, showing you that you can do greater than what you thought you could do because you've never really been pushed that hard before. Same thing with the Navy SEALs, right? And not that I'm comparing to what we do to this. I'm just saying it's the same idea, right? They're proof of what I'm talking about. You go into BUDS with the SEALs and you're like, oh my God, how am I ever going to make it through this? And people make it through it every cycle. Tons of people every cycle. But a lot of people leave as well because you can leave anytime you want. You got to step up the footprints and ring the bell. Okay. And so I tell you.
So when's our underwater training? Is there underwater training prior to trading?
Oh, no, they should be, right?
Yeah. Like the Navy SEAls. Yeah. We do some sub-contained, underwater training prior to doing any buying.
Yeah.
Just a little comparison there,
But it is, guys. It is the truth, right?
No, it makes sense.
Because in life, very few of us have really been pushed to the point where we really do exert the focus, the discipline, consistency, effort, things that I talk about. Most of the time, we kind of just meander through life and we kind of half-ass this and half-ass that. And we lie to ourselves and our friends and our family. And we say we are doing as much as we could. We are doing it as hard as we could. And we really aren't. And that's why we don't end up successful with those things we try. It's not because the things don't work, guys. It's because we don't work. And that's regardless if you come to TWC, we'd love to have you there. I think we're a great group of people. We have a lot of fun, and we're all focused on helping learn. But even if you were to go to somebody else, it's the same thing. if you can't really do those things, to be honest with yourself about it, it's not going to work for you. So, just kind of keep that in mind when you do that. Okay. Let me see here. Yes, we had the potential upside and downside covered. Yes. Fibba did a great job on that. Let me see here. Sats says TBC is great stocking stuffer. It's the gift that keeps on giving all year long.
Nice.
I agree. It's what we do, right? So Merry Christmas to you that celebrate. If you don't, happy holidays, happy Kwanzaa, whatever it happens to be, just understand we're wishing you well as the year ends and as we get into the new year. Because man, oh man, we love you guys. We love having fun here. We love talking with you. We've been doing this a long time. We really enjoy what we do, and we like sharing the things that we've learned throughout the years with y'all. And again, the fact that you're here watching the stream, we take that as that you're very serious about wanting to learn. And so we're going to be serious about sharing, the information that we can with you. All right.
Yep.
All right. So that's it. As always, remember the only thing you control is how much you lose. That is it. So keep working on that risk management. Other than that, like I said, I'm going to be off most of next week with TWC. I've got family stuff I've got to do since it's the holidays. But I think I figured out a way to make time on Friday to do the Friday stream. So I'll probably do that for y'all. No beards and Bitcoin next week on Wednesday, because Wednesday is Christmas, folks. And you should be, oh, wow. What did I get the kids this year while your wife bought the presents? Wow, is that what we got them?
Yeah, just act surprised.
Right,
like, ooh.
All right. So that's it. You guys have a great day, a great weekend, a great week, a great end of the year. All right.
All right.
And we'll catch y'all later.
Peace.
Take care, everybody. Thank you so much for joining in, guys.
All right.
Take care, Phil.
Thanks all.